All right. Let me let Trevor in. Hello and good afternoon, everybody. Thank you for taking time out of your afternoon to join us. I've asked a colleague of ours, Trevor Jones from Baker and Tilley, to come online and kind of give us a little bit of insight on um, the 2024 R&D tax credits that are eligible through the IRS and incentives that might be available to organizations, and kind of give us just an overview of those federal incentives, and then maybe even some insights into some uncommon R&D opportunities. So as we are moving forward in the work that we do, Trevor, just to give you a little bit of insight, I've invited some individuals who are deeply involved in economic development in our little sector of the world, in rural Florida, Bradford County in particular, but would love to gain an understanding of how organizations can qualify for R&D, what do they have to do to qualify, and then, as I stated, maybe some of those less common uses or applications of R&D. So I will turn it over to you, and looking forward to hearing everything you have to share with us today.
Awesome. Thank you. And thank you everyone for hopping on the call with us today. So here, I'm going to start off with, of course, my computer is freezing. Um, all right, I'm going to start off by sharing my screen here, and just let me know, everyone, when you guys are able to see it. Uh, it's going to be screen one. Are you guys able to see it? Yep. Awesome. All right. So the R&D tax credit, I'll kind of start with how companies kind of qualify for the R&D tax credit. It's really boils down to, um, do they perform projects or work on projects that meet within this R&D four-part test criteria? So this is essentially how you determine whether or not a client in your industry will qualify. There are some industries that are very obviously qualified: software development, pharmaceutical sciences, things like that, that people would think of for R&D, but there's a ton of other industries such as architecture, construction clients can qualify, a ton of other industries that potentially perform research and development activities as defined by the IRS. So I'll start off with how a company qualifies for the R&D tax credit. They have to perform projects that meet this R&D four-part test that I'm showing on the screen here. So going through each of the parts, number one, that the activities that are performed on the project fundamentally rely on a hard science. So engineering, computer science, physical science, biological science. That's simply stating that the activities performed are based on one of those hard sciences. Um, that's how you meet kind of part one. Part two, permitted purpose. This is simply put, the company or client that you're working with has to have some intent to develop or improve upon functionality, performance, reliability, quality, durability, cost reduction. So there has to be some intent to improve upon any new or existing product, process, technique, invention, formula, software that the client may have. So if they produce products, or if they produce software as a service, or if they are improving the process at which they do something. Say, I'll give you an example, manufacturer trying to improve production speed of the widget that they make. That would be the permitted purpose in that example. Really just focusing on identifying what are they trying to develop or improve upon, and then what is that thing? Is it a product, a process, a technique they use, a software, anything along that line. And then kind of going to 3 and 4, elimination of uncertainty and process of experimentation. So with the elimination of uncertainty, the taxpayer has to have some sort of technical uncertainty as it relates to capability. Can they do what they're trying to do? Methodology, how should they go about best doing what they're trying to do? Or design, what's the appropriate final design? So capability uncertainty is really kind of simply put at the outset when your client is starting the development of a project, they don't even know if it's possible to do what they're trying to do. So that's very complex. Say maybe they're working, for instance, something with like artificial intelligence and language identification. That's an area that's kind of hot right now in AI and R&D development. That would be potentially a capability uncertainty. They don't know if this is possible. Methodology now, they know they can do it, but how do you best go about doing it? What's the best way to not only do it in the most efficient and effective manner for the company, but also to achieve the best result? Or design, that's simply put, we don't know what the final design is going to look like, whether they're designing a software and they don't know what kind of business requirements and architecture layouts are going to be, or whether they're making a product and they don't know what the final product mock-up is going to look like. Those would all be kind of falling into that design uncertainty. And then to resolve their uncertainties, client has to go through a process of experimentation. So with that, think of kind of applying the scientific method to your problem. So we want to improve X, Y, and Z. We are uncertain of how we should go about doing that. So now we're going to evaluate some alternative solutions that might solve a problem. We're going to hypothesize what could and couldn't work. We're going to perform some level of testing to examine what our initial findings are and whether or not we're on the right track. And then we're going to refine and iterate our solutions and retest and kind of go through that iterative process of back and forth, looking at something, seeing if it's working. If not, coming up with some more solutions or tweaking our existing solutions to try and solve our challenges and meet our goals. So that, in a nutshell, is the R&D 4-part test. And that's how a client can qualify. So any client that has projects that fit within this criteria, then you can pick up a number of expenses as it relates to these. So those expenses are internal wages. So wages for internal employees who are performing qualified work. So they're working on these types of projects, doing qualified activities, which kind of involve design, development, testing, things along that nature. And then any supplies expense used in qualified development activities. So if you're developing a new product and you want to purchase some supplies or materials that you use in prototyping to see, okay, this is our kind of prototype of what we've developed so far. How does it look? How does it operate? Let's test on it. The supplies used to make that prototype, that would be considered a supplies expense. So with supplies expense, the key to kind of consider is it has to be something that is what's called used and consumed in the development process, meaning that you can't buy like a big piece of equipment that you're going to use to produce prototypes, a bunch of different prototypes. That equipment wouldn't be considered a supplies expense. However, like if you bought raw materials that you are using to kind of test things out and prototype things, those raw materials would be a supplies expense. The third expense is computer rental expense. So that is really for software development clients mostly, or pretty much almost exclusively. It's if you're purchasing development environments through either Microsoft Azure or Amazon AWS, those cloud computing environments. If you're purchasing environments that the software engineers are doing development and testing efforts in, those expenses related to Azure or AWS would qualify for the R&D credit. And then finally, third-party contractor expenses. So this is any third parties that you hire on your behalf to complete qualified work for you, whether it's designing, developing, testing, any of those natures. Those would be the R&D third-party contractor expenses that could qualify. So I can think this might be a good stopping point, stop here. I don't know, does anyone have any questions about what I just went over with the R&D four-part test or the expenses that are includable? Okay. Um, so then jumping on to some nuances of the R&D, how you qualify a client. One other key area I want to touch on is rights and risk. So with every client we have, you have to ensure that they have the rights to what they're developing and the economic risk. So when I say the rights to what they're developing, I mean intellectual property rights simply. And this can be a pretty easy hurdle. If it's their own product they're developing, I imagine almost always they're going to have their intellectual property rights. Or if they're a third party assisting in the development, then you have to maintain a right to either the know-how or kind of the knowledge that you gain from developing this product or things along that nature. You have to maintain a right. It's a little more complex, but typically you can identify a client retaining some rights to the intellectual property or the know-how to develop it. Now, the economic risk is always the big question. So with economic risk, you have to determine who is at risk of development. Is the client at risk of the development, our client, or is somebody else at risk of the development? So in this example, say our client is developing a qualified R&D product, but it's being funded by the government. If the government is funding that development activity, then that client is not eligible for an R&D credit relative to those projects, that funded project expenses. That doesn't mean they have other projects that might qualify and might not be funded, but any projects that are funded by a third party, by a government or another company, that funded research would not be included. Now, if you're paying a third party to develop, that again comes up with rights and risk issues of economic risk, who's at risk of development. So if I'm paying some external party to do development for me, am I at the risk of failures and project runovers? Or is the third party? And that's when you perform kind of a rights and risk analysis, which gets a little more tricky and more detailed. But I just wanted to touch on two key aspects to always make sure a client has the rights and the economic risk of development. So that is how a client meets R&D tax credit criteria. So I will kind of go here. All right. So the R&D credit kind of overview as a whole. I'll kind of walk you through what the R&D credit form. It's calculated on form 6765. So there's two ways that the R&D credit can be calculated, either an alternative simplified credit or a regular credit. The R&D credit relies, I'll start with alternative simplified credit because it's easier. This relies on comparing your current year qualified expenses to the prior 3 years. So it's something key to remember that when you're calculating a credit, essentially what we do is we determine, all right, for the year our client is entitled or has incurred, say, $1 million in expenses related to the expense categories I mentioned for projects that fit within the R&D criteria. So we have $1 million of qualified expenses. Now, you compare those $1 million of qualified expenses to the prior 3 years qualified expenses in the calculation, the way it goes is you take 50% of the prior 3-year average qualified expenses. So say in the prior 3 years, we averaged 800K in qualified expenses. You take 50% of that average, so 400K, and that is reduced from your $1 million expense pool for the R&D credit. And then from there, you multiply it by 14% to arrive at your R&D credit gross amount. So that's kind of the more simple method, which is the alternative simplified credit. The regular credit method is a different credit method you can use. This involves coming up with looking at your company's gross receipts and then multiplying that by a fixed base percentage, which there's a bunch of ways that fixed base is calculated. There's for startup companies that didn't exist during like the 80s, there's a method for calculating, and or for companies that exist in the 80s, there's a method sometimes. And then there's a startup calculation if companies don't have information or qualified expenses from the 80s. I won't kind of get into the details there. It would be too much to talk about, but just high level highlight, there's two methods, a regular method and an alternative simplified method. The regular method compares your qualified expenses to the company's total gross receipts, and the alternative simplified method compares your company's qualified expenses to the average of the prior 3-year qualified expenses. Final note to talk about is a 280C election. So with any tax credit, the mechanics of it historically are that you have to add back any tax credit you get to your net income to arrive at taxable income. 280C is an election you can make to basically reduce your credit by the tax rate so that you don't have to do that process of adding back. It's just a way to simplify the credit process. Now, this question becomes a little more complicated with the advent of Section 174, which is a new thing that we've been dealing with now for a couple years. Started in 2022. I won't get into Section 174 details right now, but that's kind of the 280C election is one other area to kind of consider. So that is the R&D credit. And then to kind of broadly put, the R&D credit, generally speaking, with qualified expenses, I find that if you have $1 million in qualified expenses, anywhere between 8 and 10% of that oftentimes can be determined to be your R&D credit expense. So if you're like roughly talking to a client and they estimate they have $1 million in expenses, you can think the credit might be anywhere from like 80 to 100K. Now, I always preface that with these are determined by a lot of factors. So that's a high level estimate, but that's kind of a number that you can think of as far as opportunity and when you're scoping things out. Final thing to point out with the R&D credit, that's an opportunity. So the qualified small business payroll tax election. So this is a option if a company is in its infancy, so within the first 5 years of their of having gross receipts, and they have less than 5 million in assets. Let me go to the exact for you guys. So companies that have gross receipts of less than 5 million for the credit year on a controlled group basis. So you have to consider all of the tax entities that are within that control group, and then no gross receipts for any tax year before 5 years, they can potentially qualify for the payroll tax offset. The payroll tax offset is it was $250,000 up to $250,000. Now it's up to $500,000 of basically credit against your payroll taxes that you pay. So it gets filed on your 941 of your clients. So this is if you have a small startup that's in its first years of operations and its gross receipts are less than 5 million, then the credit amount, whatever that may be, say we determine the R&D credit amount to be $50,000. That $50,000, they get an R&D credit for it, and they also get a payroll tax credit filed on their 941 a couple quarters after filing the R&D credit. So if you file an R&D credit in Q3 of this year, then you can expect to try and take the payroll tax offset in Q1 of the next year. So those are kind of the R&D credit, the degree of benefit that we're speaking of, kind of the payroll tax offset, which is an additional credit related to it. I'll kind of pause there. I don't know if anyone from the team or if Amber, if you want me to kind of touch on anything else or if there's any questions.
Sure, I had a couple of questions first, and then if anybody else has any
Okay.
questions, feel free to pop in. So this is in addition to the claim of the expense from their revenues, correct?
Correct.
Okay, so well that's excellent. And then in terms of like the software development side, is it still limited to just coding, or is that API integrations included? And is it also limited to just onshore, or does that include offshore also?
Okay. Yeah. So for the R&D credit, all expenses have to be incurred within the United States.
Okay.
Um, I will point out, I mentioned Section 174 briefly. Section 174 deals with both US-based and foreign-based expenses. However, for the R&D credit, we are only looking at US-based expenses. As far as software development goes, API integrations and configuration, that kind of area, it becomes a very gray area. It's going to depend on the degree of complexity. The question you always resort back to is, does it fit within that R&D four-part test criteria? And really the question becomes, is there uncertainty? So is it an integration effort? I've had clients that are integrating, like, for instance, a third-party software, but it's very complex and has to get suited to their needs. So they have to develop new functionality. They have to figure out how to effectively integrate it with all upstream and downstream applications. There's a bunch of questions about data reliability and ensuring, say, you deal with HIPAA data, you can't afford to have any errors of data migration. These are all kind of factors that would make integrations and configurations qualified. And if it's just a simple, straightforward integration or configuration and there's not much complexity to it, then that would not qualify for the R&D credit.
Thank you. Does anybody else have any questions? Looks like we're all absorbing.
Yeah.
Well, I think that is very insightful and helps us to understand the potential and opportunity and what could qualify as R&D. I know for our area, we are looking to potentially attract some organizations that are involved in more R&D aspects. So I appreciate you
Yep.
reviewing over this information. It kind of helps guide my understanding as I'm seeking to attract individuals.
Yep. And then one last thing that, while you're talking, Amber, that I wanted to point out that I neglected to is there's federal R&D tax credits, and I kind of talked through that. There's also state credits. So these states right here, these are all states that have an R&D credit. Some are kind of very restrictive. Actually, this is a better list. Sorry, I've been updating our templates across the firm, so let me get this list in front of you guys instead. Here we go. Okay. So these are states where an R&D credit does exist of some type. Each state's different. So like California is very similar to the federal R&D credit and how it's determined. Certain states you see more commonly, Massachusetts, Maryland, I have had a good amount of experience in. And then certain states like New York is exclusive to a specific industry. Texas is a very common state for R&D tax credits, so is Wisconsin. Georgia is very specific to certain industries. So some of these states, there's R&D credit opportunities, but it's very niche and not that applicable, or it's like not that good. Other states are more for. Last thing I would want to point out is look out also for where they're performing the activities. And as far as state R&D credits go, you always determine it by where the work is performed, what state the work is being performed in, which is typically pretty
What
straightforward.
about Florida, Trevor, specifically?
Florida, and let me go to my notes. And I remember it not being great. Yeah, so it's a 10% R&D credit for qualified research expenses in excess of the base amount. Yeah. Okay, let me look at this. Look at my notes. And what we do on our end is we just have kind of, because there's so many states, you can't possibly remember them offhand. So you just kind of keep a running tab of the states and any changes. So here it is. So it's eligible entities for 1120s, so C corporations only. There's an application filing period. You claim period for R&D expenses, state required to compute. Florida keyword's for prior 4 years. Yeah, so you need to compare 4 years of qualified expenses to your current year. So it's 4 prior years. And then it's limited to 50% of the taxpayer's liability. So if you have like a company that is in losses, for example, for the R&D credit for federal purposes, you can still claim an R&D credit and put it on a carry forward schedule. It looks like for Florida, you would not be able to do that. And then the credit amount is capped at $9 million. I believe that is for everyone. So yeah, it is. So basically, in those instances, there's a lot of states like that. Basically, the state says, all right, we're going to give $9 million of total R&D credits. And then it becomes a first come, first serve basis. So if you apply and then you apply super late, let's say, and the $9 million has already been allocated, you may not get anything. Or maybe the state is allocating to everyone who applied in the window, but you get a portion prorated based on if you have X amount of companies applying and you applied for this amount, but no one gets the full amount. Let's say you get 60% of what you applied for. So that is another thing to keep in mind for Florida as well. So not a ton across the state, only 9 million. So the credit that's kind of one of the issues with it is that it limits how much you really get. 5 years carry forward. Yep, that's kind of the highlights that I can touch on just off the top of my head. I can stop sharing my screen.
Well,
Any
and
other states or
yeah, I'll
go
just
ahead.
give you also a little additional information. We recently had it announced that Governor DeSantis is offering a rural jobs tax credit based on specific industries, SIC codes, and R&D is one of those areas where it could qualify for an additional rural jobs tax credit if it's in a rural area. So
Okay.
I know it's not, straightforward in alignment with R&D specifically, but I think that is helpful, to if we have an R&D or company that's investing in R&D and they come into a rural area, they could qualify for additional tax credits. So.
Yep.
All right. Well, Trevor, I really appreciate you taking the time to share with us what qualifies and what doesn't qualify and kind of walking us through those things. Would
Yeah,
we
of
be
course.
able to get that outline that you had initially?
Yeah. I saw you had sent the email on that. I am finishing up cleaning it up right now. We've been kind of working for the past couple months on developing an updated template for our team. So I'm just cleaning up. Basically, I'm spell checking and doing kind of the manual aspects of that. So I hope to have that done in the next day or so. Once I finish that up, I'll give you guys kind of the finished product of that,
Well,
and
thank
you
you
guys
so
can use
much.
that.
Appreciate it.
Yeah, of course.
All right. Well, you have a great afternoon and thank you for your time and look
Yeah,
forward to meeting up with you next year and hopefully we can get some R&D going in Florida.
Yeah, awesome. Thank you so much, Amber, and everyone for your time. Yeah, if you have any questions or anything else that kind of comes to mind, feel free to send me an email, or I can always jump on a quick call, talk things over or explain things in further detail. I'll say there's a lot to the R&D credit. We just kind of scratched the surface here even on this call, but certainly here to help if you guys have questions.
Thank you, Trevor. I'll share your information along too when you forward
Yep,
that document. Thank you so
for sure.
much.
Yep. Thank you, everyone. Bye.
Right.